So one of the things that always intrigued me when I was first paying attention to stocks is how after a seemingly good or fine earnings, stocks would go down significantly. It seems like an overreaction at times. I mean, clearly there's plenty of examples of when a stock had terrible earnings and just got destroyed, or had a really good earnings and then obviously went up a lot, maybe even more than you would think. But there's certainly times where you would have a stock that had a fine earnings and then it would go down significantly. It was just kind of confusing, right? I think Microsoft is a very good example of that right now. I mean, right now it's down 5%. They had earnings yesterday, and they were pretty good. They had a little bit of soft guidance, but let's dive into that. So the article is titled Dips on Weak Guidance After Beating on Earnings. So they beat on earnings, right? But it's the guidance that's poor. So we can look at that. For the current quarter, Microsoft called for revenue in the range of 68.1 to 69.1 billion, right? And they probably have a decent track record of beating. We can look at that if we want to, but I mean, they certainly did this last quarter. So that still implies 10.6 growth. So that's good. That they're saying that's still good growth. But analysts surveyed said they were expecting 69.8 billion, right? So we can do the math here. Even if they hit that low range of 68.1 billion, they're only off the expected guidance expecting for the next quarter by 2.5%. So just by that math, if this was specifically the reason why it fell, so which is the poor guidance, political ad there, nice, we can see that it is overreacting over double what it is. So now, is it just that? I mean, maybe that's part of it, but also there's a saying, buy the rumor, sell the news. So a lot of people buy leading up to earnings. I would assume seeing if it does well, and if it does, they're gonna probably sell after earnings no matter what. That's a lot of trading. However, as a long-term investor, right? I'm sure many of you have many different outlooks. Some of you are interested in stocks in general. Some of you are probably short-term investors. However, this is specifically for long-term investors. If you are a long-term investor in a company that has something like this, they have what seems to be a good earnings, right? 10.6% growth. They beat this earnings, so there's a good chance they hit near this mark anyways. But even then, it's only 2.5% off what analysts thought, right? And you can see revenue for this quarter was 65.59. Now, often quarters differ year to year, and we aren't exactly factoring that in. But like I said, 10.6% growth. This is not a bad guidance. It's not. Is it phenomenal? No, right? But it's still not a bad guidance at all. So when you see overreactions like this, for a company that is growing, substantially, and one of the largest companies, certainly one of the largest companies in the world, but even then, even if it wasn't, right, if it was like a $12 billion company, if it's beating earnings consistently and it had a decent earnings and it guided 2% lower than analysts thought for the next quarter, that's not something you have to be worried that it's down 5%. This, in my opinion, is an overreaction. I mean, just based off the numbers that we got, and it doesn't really matter that much in the long run. You're not, if Microsoft keeps beating earnings, right, and they keep growing at the rate that they are, in 5 years, you aren't even going to remember this day at all that it went down 5%, right? Sorry, I need to catch my breath. So there's another example. AMD. I love AMD as a company. I've held it for many years. It also helps that I'm up substantially on this company. There's many people that may have bought around here, and I understand a little bit more why those people are tense. I sold a few shares in that 210 range, which was very fun. But so I'm up substantially on this company, so it helps my weariness, with it falling. But they had a fine earnings too, right? The issue with them is after all the recent earnings, they're leading up to earnings. You can see this run up from earnings, right? So it was at 154. Right before earnings, it was at 167. The issue with AMD is a lot of people are baking into the picture, okay, what if this is the next NVIDIA, right? What if because they're doing AI chips too, what if they just have phenomenal guidance and sunshine and rainbows and and then they expect it to jump 30%, and it probably would, right? So there's a lot of that baked into this. But they guided their highest quarter ever. I believe Q4 the previous year was like 6.6 billion. They guided for 7.54 billion in revenue. So they're and gaming and their gaming and embedded stuff is just getting absolutely mauled, which it may in the future. But even with that factoring in, they're still beating all the earnings. I think data center, which includes AI and other like CPU stuff that goes in data centers, believe it or not, was up 122% year over year. If they can maintain that, clearly, that's, I'm not expecting them to, but if they did, that would be so much money. So as a long-term investor, even though it's scary to see a stock fall from 167 to 145 over the matter of a couple, that's 2-3 days, it's not exactly ideal. However, it doesn't really matter in the long term, right? As long as a company is beating earnings, this is one way you can frame it. This is a simplified version of it, but it still stands true. You can view a stock is going to trade in a particular range of PE, right? Generally. So Tesla's is going to be much higher just because it's an anomaly, and there's going to be plenty of stocks. Let's say Caterpillar, right? Caterpillar is never going to be valued at 50 PE unless something insane is going on. Like they're pouring hundreds of trillions into infrastructure. That's a weird example, but just for example, like Caterpillar is not going to be a really high PE value. It's just not going to. It's just not. You can think of some exceptions, like I said, but so it's probably going to trade in that range between 10 and maybe 28 PE 99.9% of the time, and it's going to bounce up and down between that. But as long as they keep beating earnings, as long as they keep guiding higher, as long as they keep growing as a company, you are gaining more value, even if the value isn't reflected in the share price immediately, right? Because you're moving that 10 PE bottom up, and you're moving that top up as well. So when the stock market's on a bull run and everyone's buying, you're going to be sitting towards that top end of that, whatever it may be. And like I said, it's not just cap. AMD is going to be a bit higher, right? The PE ratio on this is a little not telling the full story just because of other stuff. But generally, if we're looking at when you're not talking about writing off debt and merger stuff, they're probably going to bounce between 25 and 60 PE. That's just the reality of it. And so you're moving, what you're doing when you're having better earnings is you're just moving the bottom and the top up. You're shifting it up, even if this is falling, right? So obviously if the company stops growing and they start shrinking, leadership falls apart, whatever it may be, that's a different story. Clearly there's no bottom there. Companies will just lose as much as the company starts failing, right? But so as a long-term investor, after earnings, you should not really be too worried about the move. Even the upside, right? Even if it shoots up 20%. Oftentimes you can see that, like I said, with AMD. AMD is a weird one, but it just ran up all the way to 210, and it hasn't even seen 190, I think, since then. It hit 187, but it hasn't even gotten close to back up there. So stocks are weird. They don't always behave irrational, right? You can't price everything in. Stocks are really good at pricing in what they know, but what they don't know, they're fairly blind to it, right? So, but anyways, that's all I got for this video. If you appreciate some insights, it was a little bit of a different video than what I normally do, but I hope you learned something from it, maybe, or we can have a discussion about it in the comments section. But I appreciate all you watching. Like I said, if you enjoyed, leave a like. It helps out the video performance. It helps out the channel. So I'll catch all you guys next time. See you later.